Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. The two bullish Andrews pitchforks you can see here on my daily chart, the original late March to early July action, the more recent early July to mid-September one, both these are crucial to the running of this market and to the overall bullish incentive. In the original larger late March to early July pitchfork, the middle time, currently 274.5, had shown back in August how good a resistance it was. Then in mid-September, the lower time, currently 270 even, of the newer early July to mid-September pitchfork started taking on some of the heavy lifting of the bullish support and commenced showing the more recent and more acute bullish angle of attack that we've seen. Admittedly, we had a few closes below it, but no two consecutive closes below, which was important. Anyway, that led to 3 weeks ago, the market pushing up over the previous August highs and on to higher highs ever since. Yet the action was capped overhead by the middle time of the original larger bullish Andrews pitchfork. We also entered properly last week the congestion overhead between 267 and 269.50. There was an immediate rejection, but the toing and froing led to some large intraday indecision that eventually led prices to close above all of them last Friday. This week continued dipping into it, that's the congestion, but this time from above, and it was much like gathering ammunition for a further attempt higher, which is what we had today. Today we've gapped higher to a new recent high with a bullish opening white Mariposa. It was also the first close over, if only just, of the middle time of the original larger bullish Andrews pitchfork. The first time that's happened since mid-August, and this despite the rises we'd seen. However, up until today it was important to know that all the action had been between the overhead middle time and the newer lower time below of the July to September Andrews pitchfork. As you can see, this is a market much like of the other grain markets getting squished, and such a move higher, almost like toothpaste coming out of a tube, was what eventually happened. Anyway, all this action, which I can now see the beginning of the results of, prompted me last week and the week before to think about the August to September period being a possible hesitation area in a possible larger July to date bullish halfway hesitation. Now, I know this is a huge ask to think about, and I hope you will. Think about it, that is. I, for one, will certainly keep considering it. But just in case, I've labelled a possible target X for such a pattern up off the top of the daily chart in a 288.5 area. You can just see it peaking just under the top of the daily chart now. I will finish up with something I've repeated again and again. Please continue to keep in mind the bullish March to July Andrews pitchfork is still very much intact, and until that is broken, redesigned or reassigned, then it will rule the overall bullish incentive. Plus, well, this is all taking place in the shadow of July's monthly key reversal up. London UK feed wheat. So, since the market peaked up back in August over the flatlining long moving average, currently 196 even, failing at the time to make a single close up over it, prices had dropped away down to the lesser Fibonacci levels at 183.45, 182.20 and 181.60. 6 weeks ago, prices stabilised there just under the short medium moving average, currently 195.30. And then 5 weeks ago they started once again to rise. Now, the rise was somewhat spectacular and uncalled for, as the market moving up made 3 gaps within 2 weeks, and yet still continued to move higher. Up through the then slowly declining medium moving average, currently at 189.5, and 3 weeks ago, up over, just over, the one long moving average once again, properly though this time. We had a little hesitation at the end of 3 weeks ago that ran into the start of 2 weeks ago before a strong kick upwards with an immediate countering key reversal up just combined, which was just, and then combined with a bullish engulfing pattern. This pushed prices up towards testing the old March 2013 high at 205 even. At the beginning of last week, the market launched an attack higher that finally cracked the March 2013 high. Now regarding this March 2013 high, I'd said in my commentary from 3 weeks ago, and I quote, "And are now seemingly stalled a little as we approach the March 2013 high at 205.05. End of quote. However, I also added immediately after that, and I quote, "All this action has allowed me to draw a July to September bullish Andrews pitchfork, and it is the lower tine of this pitchfork, currently 206 even, that has recently shown the bullish angle of attack. Thus, the middle tine above, currently 222.60, is the main rising bullish resistance beyond the March 2013 high. It is, as I've said elsewhere, until this bullish Andrews pitchfork is broken, changed to a bullish shift pitchfork, or reassigned and retired into something else, then it will drive the bullish incentive higher in this market," and that's the end of that quote. Thus we come to this past week, and specifically to this past Monday, when the market made a bearish belt hold pattern. That's one of the most potent patterns available. It was therefore no surprise that we saw bearish action this week, culminating in a gapping move lower yesterday that dipped and closed below the lower tine, the first time ever. Yesterday this looked like we might have peaked, and we might start further declines. However, the bullish incentive was not done with this market, and today we made a combined bullish opening white Mariposa and bullish engulfing pattern that not only filled in the gap made this week, but also closed back up, if only just, above the lower tine once again. Thus, yesterday's strong bearish move was counteracted, and the market was breached but not broken. It will now very much depend on whether the market can maintain this bullish incentive, and if it does, then there is a target to look to topside. I spoke about this last week and before this as well, thus, and I quote, "One final thing to add. I've expressed this last week here and elsewhere in some of the other grain markets which have shown a similar aptitude. So look to the July to date action as a bullish halfway hesitation type pattern. With this in mind, I had previously placed a prospective target X in the 213.15 area. This is not as insurmountable a target as elsewhere, but let's not kid ourselves. It is still a big ask, and I've not altered it a bit from last week." End of quote. We are now a lot closer to target X than when I first postulated the idea. The question is, can the market and the lower tine hold it together to get up there? Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.